Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the latest action in the markets on this roller coaster of a day, March 30th, 2026. It's been a wild ride with geopolitical tensions front and center, but there are opportunities and insights for us long-term investors to unpack. So, grab your coffee and let's break down what's moving the needle today, with a focus on both the immediate noise and the bigger picture for building wealth over time. First up, let's talk about the major indexes, because they're setting the tone. Despite the heavy backdrop of the ongoing Iran conflict, now in its fifth week, the Dow Jones managed to claw back some ground, up a modest 0.11% today. Meanwhile, the S&P 500 slipped 0.39%, and the Nasdaq took a harder hit, down 0.73%. Volatility is high, folks. The VIX is sitting at over 30, reflecting a lot of fear in the market. But here's the thing. For us long-term players, these dips can signal buying opportunities if you've got a watch list of quality names. Short-term, though, the market's jittery with oil prices spiking and inflation concerns creeping back in. Zooming out to the broader economic picture, the Iran war and the closure of the Strait of Hormuz are dominating headlines. Oil prices are surging, with some analysts drawing parallels to the 1973 OPEC embargo. This is stoking fears of stagflation, a nasty mix of stagnant growth and rising prices. The Fed's in a tough spot, likely sticking to a higher-for-longer rate stance as inflationary pressures build. For us long-term investors, this means keeping an eye on sectors that can weather higher costs, but in the medium term, energy price volatility could keep markets on edge. Plus, there's chatter about bonds no longer being the safe haven they once were, with traditional portfolio hedges like the 60-40 split losing their luster. It's a reminder to diversify beyond the usual suspects. Now let's spotlight some movers in the large cap space. On the winning side, ServiceNow jumped nearly 6%, showing strength in tech services despite the broader Nasdaq weakness. Palo Alto Networks also caught a nice bounce, up about 5%, as cybersecurity stocks rebound from last week's sell-off. Salesforce and Intuit were solid too, each gaining over 3%. These names are showing resilience, and for long-term portfolios, they're worth watching as leaders in their spaces. Short-term, this could be a sign of rotation into defensive tech plays amid uncertainty. On the flip side, some big names got hammered. Micron Technology tanked almost 10%, continuing a rough patch after a massive rally. Sentiment can flip fast in high-expectation trades like this. Boston Scientific also dropped over 9%, despite some positive trial data, showing how market nerves can override fundamentals. Lam Research and Western Digital weren't spared either, each down more than 5%. For us long-term investors, these pullbacks might be a chance to scoop up quality at a discount, but near-term volatility could persist with macro headwinds. Looking at the market movers by volume, Nvidia and Tesla were, as usual, in the spotlight. Nvidia saw a slight dip of about 1.4%, but it's still a heavyweight with massive yearly gains. Tesla also slipped nearly 2%, with delivery numbers on the horizon creating some uncertainty. Micron, despite its big drop, was heavily traded, reflecting the intense focus on semiconductor swings. These names are core to many portfolios, and while short-term moves can sting, their long-term growth stories remain compelling if you're patient. Diving deeper into the most active stocks, Intel caught attention with a 4.5% slide, showing the semiconductor sector's mixed day. SoFi Technologies held steady with a minor dip, still up nicely for the year, hinting at sustained retail interest in fintech. Snap also popped up with a 2.8% gain, bucking the tech downtrend. These high-volume plays often reflect short-term sentiment shifts, but for us long-term folks, they're a reminder to focus on underlying business strength over daily noise. Over the past week, some large-cap gainers have stood out. Garmin surged over 21%, a standout in consumer tech, while AppLovin and Shopify each climbed more than 14%. Occidental Petroleum also rode the oil wave, up over 14%. These weekly moves highlight pockets of strength, and for long-term strategies, they're a cue to research whether these trends have staying power or are just short-term pops. On the other hand, the past week wasn't kind to everyone. Genuine Parts Company plummeted over 20%, a stark reminder of cyclical risks. Rivian and Blue Owl Capital each dropped more than 13%, showing pressure in autos and financials. These weekly losers might offer value for long-term investors if the fundamentals hold up, but near-term headwinds are clearly biting. Shifting to sector performance over the week, industrials led the pack with a 2.12% gain, followed by consumer cyclical at 1.62%. Energy, no surprise, was up 4.62% on oil price tailwinds. These sector moves are critical for us long-term investors to monitor. Energy's strength could persist if geopolitical risks don't ease, while industrials might signal broader economic resilience. On the weaker side, healthcare lagged with a 0.62% drop over the week, while utilities and financial services also dipped slightly. These sectors are often seen as defensive, so their underperformance might reflect broader market rotation into riskier bets. For long-term portfolios, this could be a chance to add stability at lower entry points. Now let's peek at the earnings calendar for this week. We've got some heavy hitters reporting, including Lululemon, Chewy, and Cintas. These names span retail, consumer goods, and services, so their results could give us a pulse on consumer spending and business confidence. Carnival reported last week with decent numbers, hinting at travel demand holding up despite macro pressures. For us long-term investors, earnings season is a goldmine for gauging whether companies are executing on their strategies beyond just the headline numbers. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and uncover actionable insights for your portfolio. Wrapping up with a broader market thought, the S&P 500's recent 7.7% decline since the Iran conflict started is worse than past geopolitical shocks. Analysts warn there's room to fall further if ceasefire talks stall. Yet, voices like Bill Ackman are calling this a rare buying opportunity, arguing U.S. stocks are extremely cheap right now. For long-term investors, this dichotomy is key, balancing the risk of further downside with the potential to build positions in quality companies at discounted valuations. And one last note on tech-heavy Nasdaq. Down over 10% in a correction, it's showing oversold signals. Some market watchers are betting on a sharp rebound soon, with extreme fear readings historically marking attractive entry points. For us, it's a reminder that while short-term pain is real, tech's long-term growth drivers like AI and digital transformation aren't going anywhere. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope you found some valuable nuggets to inform your investment journey. Make sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper dives into companies and trends. Hit that like button, subscribe, and we'll see you tomorrow for more market insights. Keep building that wealth, one smart decision at a time.